Hi, I'm David Witter, founder and CEO of Financial Harvest Wealth Advisors. Excited to be with you today. Big changes proposed with the tax reform bill that passed the Senate, the House, and now goes to the Senate. I know these are proposed changes, but I want to get out in front of this because there's several things. I picked the top five, several things you need to be thinking about, anticipating, and preparing to act. The reason being is, although these reforms would take place in 2018, it would actually affect the strategies you should be in for this year as well in 2017. So let's jump into the top five that I picked out here. First of all is rates and bands. Notice here I highlighted married filing jointly 28 and the 25% bracket as an example. Here you can see that from 153 up to 233 in the past was taxed at 28%. In the new proposed, it drops down to 25, and that band goes all the way up to 260,000. Big tax savings. That's true for the bottom bands as well. Big savings here. So one thing to be thinking about is, does it make sense to push income into next year and maybe bring deductions into this year to get your income down for this year? Second is standard versus itemized deductions. First thing is, standard deductions are proposed to double in the amount there. The second thing is the itemized, there used to be a phase out of the itemized deduction. So as your income went up, they would take away the ability to utilize itemized deductions to reduce the amount of savings you can get there. These two things we got to keep an eye on, because again, if they're pushing this in 2018, it might affect your strategy for, should I be itemized or standard deductions, and should I be trying to get deductions here in 2017 or pushing and waiting until 2018. Number three, the capital gains rate was actually unchanged. So you can see here it's still at the 23.8%. Why does that matter? With your investment strategy, it makes it even more critical in the years to come that your turnover ratio within your portfolio is low to push down on tax impact. Secondly, is it makes strategic gifting even more consequential in a positive way for you. Instead of just gifting cash, especially if they raise the standard deduction, gifting appreciated assets is a much more strategic way of doing it, because it avoids triggering the 23.8 capital gains rate. Number four, Roth recharacterizations. So if you do a Roth conversion, the current tax law allows you to do a recharacterization as far as out to October of the following year when you file your tax return. For 2017, that's still a possible strategy. 2018, if the tax reform is passed, they're taking away the recharacterization possibility. What that means is you need to be having these conversations this year, because you have more flexibility in maybe doing a Roth recharacterization if you do end up doing a Roth conversion this year in 2017. And last but not least, the estate tax exemption, if it's passed, would double, going up from the 5.5 million all the way up to a little over 11 million per person. This will shape gifting and also the estate tax planning, especially for future years. And if it's passed in 2023, the estate tax would go away. So big planning opportunities there. Maybe some changes we need to make in 2018 as we head into 2017 to 2018. All right, so what is the dominant strategy? What do you need to be doing now? Number one is have an expert team. If you don't have a CPA, an estate planning attorney, and a wealth manager working collaboratively together on your situation, there's never been a more perfect time to make sure you have that in place. Number two is be prepared. Here toward the end of the year, there might be some opportunities where you need to act and move fast. You've got to have your expert team ready. You got to be nimble and be ready to move with that to, again, maximize your tax impact and savings. And last but not least is call us. If you're a client, especially once things actually get passed and pushed through, we're going to be here ready to educate you and talk about your specific situation. But be prepared. Call us if you're not a client of ours. Let's talk through this, because there might be some important opportunities that you're missing. As always, looking forward to hearing from you. And remember, dominant strategy, expert team, call us, and be prepared.